All right. Welcome back. Let's get started. Again, not much going on in the markets. It just seems like it's just buying time going into Thanksgiving. Um, there's not there's not a whole lot more good news I can possibly give you in terms of the vaccine. In terms of the um, stimulus, do you really expect something to happen now? Uh, Anything can happen, but do you expect it? I don't think so. Why would Trump do any kind of stimulus uh, to help Biden? I don't see that, right? I don't see it even after Biden that the Senate would approve. So you end up in this really funky kind of scenario that even if the market were to sell off, do you really think that Trump's going to be, oh my God, the market is selling off. Okay, let's stimulate it. Okay, let's just make an agreement. Does anybody see that? Do you think Trump gives a shit about any Americans? You got to be delusional. The guy, he's on a scorched earth uh, plan right now. He's broken arrow and shit. So, uh, again, the market is just kind of lingering up there, and we'll go through some stuff. Maybe a little bit more different stuff than usual. But we'll talk about Bitcoin for sure. A lot of different things going on in Bitcoin. So let's get started. All right, so back here is when I said MMT everything. I talked a little bit about um, QE2, QE twist, Operation Twist, QE3, and whatever else, right? So here we are now, and if you were to do this on a closing basis, okay, we're above the previous daily all-time high, okay? Um, but then when you kind of flip it back over, it's kind of gone through, came back, trying to make that new high. Now the problem with this is that no matter how you slice it, there's just way too many bearish structures that are working against you. If you do this, then you end up with what? Another down move, right? So you get the 1, you get the 2, and then you're still going to look for a 3. Right, so it's still bearish. It's not bullish. You don't like the double top. Doesn't matter. It can continue to go up more, right? Go up. It still needs a 3. Um, there's just way too many things that are not going for the markets right now to be bullish. You're not going to get the stimulus anytime soon. You got the chart patterns that are, you know, either double tops or rising F flags. It's not there. Uh, Take a look at the NDX, the market leader, right? You got this structure in place, all right? Um, Again, what's the plan? That we're going to mark this as is, and we're going to draw it, and you end up with a 1, a 2. You still need a 3 now, okay? Um, you don't like that pattern. You like this pattern better. Okay, fair enough. Whatever you like. 1, 2, 3. Broke, came back, having some difficulty, right? Even if this were to push through, even if that was to break through, what do you end up with? Right? Come on. What do you end up with? Rising F flag. Okay. It's still going to be counted as a 2, no matter where it goes. Right? That's a bearish structure. Now, if it comes all the way back down here, and then you want to buy, I'm on your side. I am your best man for that. I'm all about the bullishness. Okay? You can do that. And it will. If it were to go all the way to the top, it would come down here. If this breaks, different story. Right? Different story. I don't know how else to explain it. Let's look at the IWM. And this is during trading hours and stuff, right? What do you see here? You see the same thing. 1, 2, 3. Still back in structure, okay. Still way below the all-time highs. Now we'll do some analysis maybe on this one later, so I can explain a little bit more on this. But just be aware that the Russell PE is extremely high. Okay. I guess fatigue is setting in, and people want to be bullish because that's what they've been doing for 10 years. And they can't stand it anymore. They just want to be bullish. That, to me, that's the ultimate top. when you start getting fatigued and you're like, fuck it, I'm just going to buy. That's it. That's game over. That's the top. Right. That's when you just everybody's capitulated. They're like, fuck it, I'm going to go buy. Yeah, okay. Well, you can do that. Good luck. Especially if you're going to give some. The other ones that I like is the one, oh, look at this stock. Yes, I bought this stock and I made so much money and I did and I fucked and I sucked and look at me and wow. But they don't expand the rest of the portfolio. That looks like fucking Syria. That part, no, we don't know. It's okay, my friend. Just look at this one. This is the one I like. Hindsight experts. Swinging dicks. That's what I call them. That's my new name. The swinging dicks. Um, the equal weighted S&P is pushing higher. But for today, popped up and came back in. It's building a little high base in here, testing the previous high on a smaller time frame, which is this. Okay, so you got that big pop on the vaccine. Came, tested it, failed. Broke above it, failing again. But this is again, it is a wave 3 up. Okay, wave 3 up. Dividend weighted, nothing there. VIX broke below, popped up a little bit. New York Stock Exchange still testing that previous high. Dow Jones, previous high. Oh, and by the way, it's so funny. Pfizer comes out, they're like, Moderna is 94.5. Well, we're 95 too. Yep. We just tested it now, and it's 95% effectiveness. They're so funny, these people, I swear. I'm sure Moderna tomorrow is going to come out and they're going to say, well, we're 95.1. Anything to get you to buy stocks at the top so they can unload it. Anything. And people believe it. That's the best part. S&P 500. Right. Kind of hit that willow tree kind of looking thing where it just keeps failing, right? But it has broken the structure. The bad thing is, again, what's it trying to do? How good of a job is it doing, right? So it's trying to go down, but it's not doing a very good job at it. It broke the trend line, okay? But you can't call it bullish either. It's just pausing. You want to call it a high base? Perhaps. I don't know. But for right now, it's not going anywhere, right? Nasdaq holding this trend line barely, trying to break through, not doing a good job. Again, if this were to break out, then all bets are off. Let's see what it does. It can be a much uh, more complex 1, 2, 3 up and down. I don't know. I don't know, honestly. But um, this one is not making up its mind. Uh, Earlier this morning, I told subscribers be careful of the small caps. There's a little structure in here that's bearish. Sure enough, in the afternoon it broke, pushing lower. So that's about it for that. Transportation's double top. All right. Now I also drew this little trend line here in the fags. And what you'll see is it broke, came back up. Magnet is that little trend line, trying to hold it. But I think ultimately what's going to end up happening is this will start to drop. Okay? Possibly test this previous low. If not, this previous low. But for right now, the head and shoulders is still in play. Okay? Nothing new. World Stock Market Index, nothing new. Skip this one. So this is jets. This is the airliners, right? We've been talking about this, and we'll talk a little bit more about jets. I kind of got cut off yesterday, and so I just kind of left it there. But we'll talk a little bit more about airlines. Okay. Uh, this is the little indicator that I have, which is Hilton, Diana Shipping, which is Dry Cargo, Car Avis, Delta, Royal Caribbean, and Tsakos Energy, which is oil tankers. It's gotten back into structure. We are in a wave three. I don't think anybody can doubt that one, right? 1, 2, 3. Okay, ending pattern. Let's see where it tops out. All right. But there's ways you can test to see if we have bottomed, right? If the economy has bottomed, if the stock market has bottomed, and how we can test that, right? So maybe we'll talk a little bit about that. China broke a little bit above, trying to hold within this structure, right? A little bit better than yesterday. Um, the bias, as long as price remains within the structure, is to the upside. Okay, but again, this is a corrective. This is a rising wedge. Broke the all-time highs previously, right? But it does look like it needs to correct. All right, so we can get one more up and then start to correct. That's possible as well, but we're not there yet. All right, but for right now, it's within that range, and this is the more major trend line right here.
Mic off. Mic on.
Now the other thing you'll notice is that it didn't quite have the energy to come right to the top here on the previous try. Okay, so that's a sign of weakness, not strength. Emerging markets almost at the previous trend line. Emerging markets continue to push incredibly bullish. Japan kind of topped out really short term, but again, wave 3 up. Right? Australia, wave 3 up. Nifty 50 continues all-time highs. Cosby is pushing higher, right? All of Asia is doing really good because they do, in fact, have the COVID under control. They did sign a pact. They're functioning a lot. Their economy is functioning a lot more normal than the rest of the world. Of course, it would be great for them if the rest of the world caught up, right, and started dealing with COVID. Europe now seems to be reversing the trend of the cases, so that's a positive for them. U.S. is still sitting here looking for ballots that are fraud and bullshit. It's the same shit with Trump, you know. It's the same shit. The guy's just a disaster. Instead of just dealing with it and just getting the economy back, he's sitting here wasting people's time. Germany head test hasn't gone anywhere today. Okay, high base is forming for sure. UK, okay, seems to be topping out here, just below the previous high. We got this little structure in place. Okay, little megaphone. All right. Let's see if we can push one more up, test the previous high, and then we'll start looking for the downside. Let's skip this one. Taiwan, again, it's Asia, kicking ass. Brazil, triple top here. Uh, relief rally, 1, 2, 3 up. That's fine. But again, you have a triple top, right? 1, 2, 3. Again, it doesn't mean that it can't push higher. Okay. This is, I haven't talked much about this. Denmark. Um, you know, Denmark is a strong economy. It's just like the Germans, right? But again, they're still in a wave 3 up. They're still below the previous high. Markets again don't go straight up and then straight down and then straight up. So you know the fact that it bounced, created the structure, breaking out is not unnormal, right? It's normal. But again, this is what I would expect the U.S. to have done, right? Where it's still below the previous highs, factoring in all the problems that we're having and possibly could have. That would make sense to me, not be at all-time highs. So, whatever. Saudi, double top. Oil. Oil is funky. I wanted to give it the benefit of the doubt that it can come and test the previous high. And I thought this breakout would kind of do this, test the previous high, possibly even come to the top, and then reversed. And what ended up happening was that it broke down and just kind of withered away. All right, so then you end up with this structure here, which is a rising structure, a rising F flag. Now, of course, it can stay in here forever, right? For not forever, but for a long time. But again, you need this one to correct at some point. So on a correction, I think oil would be okay to buy, depending on the conditions at the time. Uh, we're also at the previous high end, I would say, since um, this area here. We got a new tool, by the way. I love this new tool, which is the volume by price. Okay. So you can see that the volume by price, we're a little bit above the point of control going into this area here where volume drops off, right? So perhaps if it comes down here, breaks the structure, corrects, and then bounces, this would be a nice little buy. Okay. Bitcoin. All right, so let's talk a little bit about Bitcoin. Bitcoin on a monthly. This is a monthly close, and this is why I use the line charts sometimes. I don't do it much live, but behind the scenes I do. On a monthly close, right now, as it stands, it's an all-time high. On a weekly, it's testing the previous highs. Okay, again on a weekly close. So we're getting really close to this previous high here, which is 19.4 or whatever, 19.5. And if I'm not mistaken, we hit as high as 18.5 and change. So what ends up happening is that once you start getting that close, you can get that double top, right? You get that little pullback, right? Maybe somewhere down here, I don't know, 15, 14,000, and then it makes the next push up and then continues higher. Fuck. And then continues higher. Okay. So if I were you, as a suggestion, uh, when we're getting up to these frothy levels where it's testing a previous high, we know it's a potential area reversal or pause or whatever. You want to reduce your risk. Okay. Do it by 1/3, do it by 50%, do it by 25%, doesn't matter. Reduce that risk. If in case everything starts to sell and Bitcoin comes down with it, you're going to want to rebuy this. Okay, you want to get back in, but you want to add that 25, 33%, 50%, whatever it is that you took out. You want to be able to put that back in once you get a favorable structure and setup to go higher. Okay, but again, be aware that on a monthly close, right now where we stand, it's all-time high. On a weekly, it's testing the previous highs. So take a little bit of profit, right? It's not you're managing a trade. It's not that you're abandoning that it's going to go up to 50,000 or whatever. You're not. You're just going to re-put that back in. And if you start getting into that FOMO bullshit again that people get into, and it goes above, and you're like, oh, I missed it, la la la, blah, 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 blah. Remember, it's going to correct. Don't don't get caught up with the permabulls. Okay, reduce risk. This thing is going vertical. All right. We won't go through the other cryptos. Gold, okay. Again, on a weekly basis, it looks like it wants to correct. It's testing that previous high right back here, made in August. Okay. Um, it's not giving me that uh, warm fuzzy feeling right now. And again, it could be because um, the market might start selling off here. Okay. And and perhaps I'll show you later uh, the everything sell panic, what it looks like, and it takes everything down with it. Gold, Bitcoin, commodities, doesn't matter. Everything comes whew, down, risk off, and then money starts getting reintroduced back into the market, and everything goes back to normal. All right, commodities, nice little breakout. Okay, holding palladium, copper, little pullback, base metals, agriculture pushing very nicely higher, wave three. Uh, Commodities, not a follow through, right? It broke out, but no follow through. Sugarcane up against resistance. Corn breaking out, okay, but it's not very bullish looking, right? Wheat pulling back. Steel doing really nice, okay? Broke out. Soybeans really broke out. Forget about net gas. All right, let's talk about the dollar. The dollar is holding here barely. Okay. Now, again, if you were to make a count from the bottom, one, two, you still need one more up before it starts to fall apart. It would have been better if this broke and you ended up with something like this. Okay, one, two, three. Because this would be a bullish structure. And it may still be a bullish structure at some point. It may be. But uh, right now, if it does one, two, three, and then breaks, it's not going to be as bullish. You can't you can't make the same pattern. You would need a lot more correction in there. Okay. But if that, once this breaks, the whole thing starts to fall apart, right? This whole structure is done. ISM's nothing. Japan continue. Again, U.S. dollar is kind of a leading indicator, right? I find it unlikely at this point that it's not going to test the 101 area or the 100 area and possibly go even lower. But for now, we'll just say 100. Euro coiling up. The pound is continuing to grind a little bit higher, right? But it's not through the resistance area, right? Turkish lira, ruble, they're all appreciating. USD CAD, Australia, New Zealand. We talked about these yesterday. Right? Dollar one, dollar continues to be weak, and the euro index just kind of building pressure. 10-year, okay, yields are starting to come off slowly but surely. Right, made another low today, double top. Okay. Again, if fear comes into the market, dollar goes one more wave up, we should see bonds come down again. All right, and the market will sell off at the same time. Aggregate bonds broke out again. What does that tell you? Bond prices up, interest rates lower. Okay, so finally it did break through. Let's go through the fangs. Okay, Apple broke down. We set this trend line yesterday. It is starting to finally break down. We've used this before. Where is it? This one. Let me set this up real quick. Here's Nasdaq. And this one will be Apple. 1 second. Let's make it a 1 year. There it is. Okay. So the leading indicator is, again, struggling with this trend line. It is falling a little bit below. We are starting to see that the Nasdaq is starting to fall out of this structure here. Okay. We know that this high does not coincide with Apple's high. Okay. The Apple high, this Apple high here, let me draw it out. This one coincides with this one, and then this one coincides with nothing. Right? And that's what makes it a leading indicator. That's what was a leading indicator here. As the markets were going higher, Apple was not. Okay, so again, there's more and more evidence that is building that we're going to see further downside. Amazon, oops, let's go to the other one. Same thing with Amazon here, but let's go to the other chart. Amazon has to maintain this trend line here. Okay, still fairly weak. Microsoft, head test, coming back down. Facebook, pushing lower. Netflix, nothing there. Google, even Google double topped now on a smaller time frame. Okay, you can see it there. 3, right? You see that? Nice M pattern. That's looking bearish. Nvidia, double top, fell down. Tesla, so happy that it's in the S&P, so money's going to flow to it, like it or not, from the ETFs. So it's testing the previous high. Again, double top. Delta broke out a little bit above the previous high, coming back down. American Airlines is, uh, to me, it's almost like a leading indicator because, okay, it broke out, and I said anything above this trend line you want to buy, right? Broke. Okay, fair enough. Breaks again, and look what it's doing, coming right back down. So if American Airlines is not going to take off, which, by the way, American Airlines is the biggest airline in the world. Okay, there's some other ways. There's numerous ways of measuring it by airplanes, by traffic, uh, but American Airlines is the biggest in the world. If American Airlines is not breaking out, you should be worried. Okay. Um, Southwest didn't even make it to the previous high. Alaska did a little better job. Okay, I'll move this here for the double top. JetBlue didn't even make it to the previous high. Spirit didn't make it to the previous high. Allegiant is doing far better. Again, didn't make it to the previous high, but it is a double top. And the only one that's doing really good, relatively speaking, in terms of vaccine, is Copa. Okay. EasyJet also not doing bad, but it's stalled. China Eastern Airlines kind of broke out today. Okay, that's good. Makes sense. It's Asia. Um, so that's it. All right. So let's go back. Let's see what's going on short term. It's now 3:42. Let's go to 5 minute. So again, we're seeing that price is just kind of hugging this trend line. Okay, and waiting for this to break now because it's built that consolidation here. It's kind of falling, right? You got this pressure that's building, all right? So you're looking for this move next, okay? Alternatively, if that doesn't happen, then we're breaking out, and that's the end of that, right? If it does something like this, and it's possible, anything's possible. You don't know. It's just coiling up. Uh, it can, break out, and that's it. This whole thing is negated. But because it's still in play, you have to assume that this is a 1, this is a 2, and 3 is coming, and that's the likelihood that this will break to the downside. Small caps continue to fall. Okay. S&P, yeah, you see, this is what I mean. That you got that pressure, right? And into the close, now it's breaking. Right, so 1, 2, 3, right? 1, 2, 3. Then again, you end up with a double top, M pattern. This should break. And we see it in the charts. We don't see it very clearly. We just see the bias that should this continue like this, should that continue like that, should, you know what I mean? The way it's setting up that you're going to see everything sell off. For example, the short term topping out of Bitcoin, gold is not doing what it's supposed to. Jets are not following through. This is what I mean. Okay. Sure, Asia is doing really nice things. And that's great, but they're wave 3. Same thing with commodities. They're doing great things, but it's a wave 3. You look at China. China's weak, right? It's not doing that next push higher. So you end up in this scenario. You look at the dollar. It's about to break, but it doesn't break. It's kind of sitting there. Needs one more wave up, right? So you you deduce that there has to be a down move coming at some point. And it makes a lot of sense with our analysis of the S&P and the Nasdaq. We need the wave 3 down, and then everything resets. We get the structure. We start figuring out what to do next. Right? That's what it's about. That's what brain market charting is about. It's about understanding how uh, it all fits together. Where's the best risk reward, and then taking the trade at key areas. Let's look at the S&P 500, and again, we are near the low. I think 274 was the lowest for the earnings yield. Um, let's look at the market internals. Where is it at? There it is. Okay. So the S&P is down 0.4 for the day. Industrials are leading. Consumer staples, materials, and financials. Garbage. Lagging. Energy, utilities, healthcare, real estate, and information technology is somewhere in the middle. Right. So consumer discretionary being number 2 is kind of okay. Technology in the middle of the pack is not. Industrials leading, really? Okay. But again, we've seen this theme for how many weeks now? A lot of weeks, right? Every day we're looking at it. Every day we're looking at it. You don't have that market leadership, and that should not be spelling bullish to you, unless you start seeing technology, information technology, kicking ass. Those are the market leaders. How about on a 5-day? Energy, industrial, financials, real estate, and materials. Lagging utilities, healthcare, information technology. That's what I mean. It's not. It's not there. Okay. We look at the Fed's balance sheet. Right. It continues to rise. I mean, it's testing the previous highs, right, which was 7,165, and now we're 7,175. So it's a little bit above it. Right. So you're getting that QE, but it's not, you know, rising significantly. And I think I have a chart here somewhere. Okay, here it is. So let's kind of go over this. So you had the great financial crisis right in here, and then QE came into play, which bottomed out the market, right? That's where the market bottomed out. And by the way, this is a rate of change over 63 days. Okay, 63 days. Why? Because that's 1 quarter. So I want to see how much money is being pumped, at what rate, in uh, in the economy. And remember that QE is converting bonds into cash. Okay. Now somebody somewhere out there is saying, "Well, yeah, but it's bank reserves, and it stays in the bank reserves." Yes. When there was a reserve requirement, it did get stuck in the uh, Fed's balance sheet. Yes, this is true. But what does that do? Well, it meets the requirements that you need. So what happens to the other money that is excessive reserves? Well, that frees it up. See, they stop where they want to stop to try to justify why there's no inflation, but they don't go to the next step. They're so wrong, and then they'll run around and go on Real Vision and everywhere else and start, yeah, this is why we don't have inflation. Bullshit. If those dollars are being converted into reserves and meeting uh, reserve requirements, well, that's freeing up the other reserves which are excessive that you can go out and invest any way you see fit as a bank. I hear these things and I start to cringe because it's like, God, you know, You're so famous. You got so many followers. You're the man. You're whatever, and you don't know that. Whatever. I'm just gonna do my thing. Whatever. All right. So the red line is the S&P 500. Okay. So we bottomed here. Then QE came in. Nice little rise, and of course, stock market went along with it. And we had our ups and downs. We had a moment here where it just kind of flattened out. All right. And you can see that in the stock market. Nonetheless, the remember that here deficits were 10%, 7%, 6%, 5%, until we got all the way to about I think 2 or 3% um, somewhere in here, if I'm not mistaken. I'll have to look at it. Okay, and then what ends up happening is that once QE starts to flatten out, what did the market do? Oh yeah, it started to flatten out as well. In fact, it flattened out for almost 2 years, right? 562 days, and it went sideways. You kept getting these pullbacks, okay, and then finally, what happens here is that uh, they start to increase deficits again. This is where deficit starts to increase again, and then the market starts going up, and then you had that QE in Europe start, okay. Now remember, QE doesn't matter where the money comes from. It comes from all over the planet, right? If you deficit spend in Europe, those dollars are going to make their way to the U.S. If you're QEing in Europe, it's still going to make the money. The money's going to come to the U.S. Okay, it's not going to go to Nigeria or Lebanon or Russia. Okay, so then that propelled the market higher. Okay, now see here's where the deficits really start to come in. So that's a mistake. So then we got that big drop that nobody understood right in here, and look what happened. QE started to unwind and started to suck dollars out of the system. And you had that big 20% drop here. Okay. So deficits come in, and then guess what? Aha, repos, right? Repos came in, which is QE, but it's short term, 2 weeks instead of long term. And that was the summer of 2019. So you had deficits increasing, you had repos uh, being pumped to the banks, right? And those banks were putting up collateral so they can repo, and then they were going out and buying stocks. And that's why you see we went into euphoric land. And then reality hit with COVID, and the market started to crash, and we went. Oh, and by the way, note here how with repos the Fed's balance sheet started to rise again. Okay, let me make it clear. Right, so right here, this is where repos started to come in, and the Fed is like, no, it's not QE. Well, your fucking balance sheet is rising, dude. No, 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 it's not QE. No, 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 it's not. It's just repos. And then that's when we went to euphoria land because we had large deficits. And don't forget in 2017, right in here, and this is what I meant to say, was it's not that deficits increased, it's that you had tax cuts. Okay, that's when the tax cuts came in to help propel it along. And I was like, okay, if you're going to cut taxes, you're going to increase deficits, what are you going to do in a recession? Right? Anyway. So then soon as the market crashed, immediately they come in with QE to the tune of about $4 trillion, and the market recovers. And now we can see that, you know, QE has not done a whole hell of a lot. Well, neither has the market. Okay. So that's where we are today. And again, you need to see more QE You need to see more deficits if the market is going to go higher. Otherwise, I would argue that the bias is to the downside until that happens. And I don't think Trump is out to help anybody. I don't think that um, any deal is going to be announced anytime soon. Could be wrong. So, food for thought, guys. Okay, food for thought. I'm not a anti-deficit guy. I'm not an anti-QE guy, but you know, there are limits to things, right? There are limits to things. The more you print, the more you have to print. The more you QE, the more you have to QE, and the more helicopter money that you're going to spend, the more you're going to have to do helicopter money. Okay, they're showing you now. I found this a little bit funny. They showed you in California, I think, or Texas. I'm not sure where. A big line of cars where they were giving away food, and they were like, "Oh, look, this is America. Look, America. They're going up with their Porsches to pick up food because they're dying of hunger. Look at all the cars." Are you fucking kidding me? I swear, like, do people believe that shit? Sure, even me. If you're telling me they're giving away food right down the street, I'll be like, fuck it. Let me go get some turkeys, some milk, eggs, whatever. I don't give a fuck. I'll go get it. It's free. I'm stupid. Or the other guy's smart and I'm stupid. You know? So when they do these publicity stunts to show like, oh, look how poor we are. Oh, the Republicans. I can't stand it, man. I cringe. You're going up in a car to pick up food. If you got enough money to fucking have a car and to burn gas waiting in a fucking line to go pick up food, you're not poor. I don't know. Call me crazy. It's very cringy. Very, 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 very cringy. I don't know. I don't understand politics. I never will. I don't want to be honest with you. All right. The 2 minute mark. Finally, we're almost here. Let's see what's going to happen with. Exactly. Like, come on, man. You're going in a BMW to pick up food because we're starving. Like, ah, fuck. I can't, man. I can't. Seriously. Fucking shoot me. People buy that shit. Just like they buy the voter fraud. Just like they buy, oh, COVID is just a fucking liberal hoax. They're both crazy. They're both fucking nuts. Both sides. I can't, man. And then they're like, oh, you're a liberal. Oh, you just hatred for Trump. What hatred for Trump? The guy's a fucking moron. He's lying. He doesn't do shit. He's got everybody in a fucking wild goose chase. He's spending tax dollar money for no fucking reason. He's not attending COVID meetings. We're fucking going up in flames, and he's in there playing fucking golf. What are you talking about? When I was bashing Sanders crowd, right? Well, we need a Green New Deal. We're going to spend $6 trillion a year to, reduce the 14% carbon emissions that the U.S. is putting out. Fuck the other, whatever it is, 86%. Fuck them, right? We don't worry about them. We got to worry about our 14%. We got to get it down to like 6. Yeah, okay, whatever. Like, like so stupid. You know, I don't know. I'm not good at this stuff. I don't because I piss everybody off equally, I guess. The Trump bots, the real progressives, the liberals, the Republicans, independents, the libertarians, because they're all fucking stupid to me. And if I piss everybody off, what can I do? They love me when I'm on their side and hate me when I'm not. But it's logic. It's common sense. All right, so that's 4 o'clock. Market closed down 0.64% in the Nasdaq. S&P down 1%. Dow Jones 1.16%. New York Index 1% down. And we said that last night for subscribers. We said today is going to be a day we're going to look for downside. And that's okay, that's okay. If you want to stick a little bit around, we'll go over some really cool things that I think are important. Okay. Um, shouldn't take too long. Transportation average is actually up, surprisingly. Um, and the FAGs were down 1% for the day, which is a bit more than the Nasdaq. All right, so let's take a look at the way they closed. All right. So it broke the trend line. Okay, broke the trend line. So we're going to look for that continuation for tomorrow, for this to continue to come down. Okay, so that's a good thing for the bears. Not a good thing for the bulls. Germany was down a little bit, 0.27, but it's right in the middle of nowhere. Okay, Asia again, they're in wave three. Everything is doing fine. Oil, I'm interested in that. Yeah, it pulled back. It it's not ready to go. Bitcoin flat for the day. Okay, 0.02, whatever. It looks like a willow tree, right? It's kind of fading away. Um, if you do take um, if you do take profits and you're afraid, the FOMO thing. If it breaks this trend line here, you can put a buy here, and it does one more up to the previous high. This is a nice little trade. Okay, this is a really nice little trade here. It's about $1,000. All right, so you could do that. That's okay. What else? Gold. Yeah, see, that's what I mean. Gold is starting to sell off. I don't think stimulus is coming, so of course it's selling it off. And again, Bitcoin is going up not because of stimulus, because it got accepted into PayPal, right? So that's a good thing for them. Uh, dollar, little bit of a bounce. Okay, little bit of a bounce. So for tomorrow, we want to see this, how it's going to behave. Okay, is this going to push out and out for that next wave up that we're looking for, right? And this is a closer look at it, right? One, two, we need one more up, three, and then down. We'll see. But that would imply that everything else is going to be getting sold. All right. So this is the part I wanted to kind of cover here. Leading index. Now this is from the Philadelphia Fed, and it predicts 6 months growth right over here. The leading index for each state predicts the 6 month growth rate of states' coincident index, and it lists all the things that it covers. Okay, right. So it's supposed to predict 6 months in advance a recession, and always with these things, hindsight. Oh my God, look at that! Oh wow, that's sexy. Ooh, here too, it started to predict it. Look at that, huh? See, right? Because they go out and they like Logan, they come up with these hindsight, backward-looking indexes and see if they can make things work. And once they do, then they pass it off to the peasant and say, look, this thing works. You should follow this. Yeah, this thing is really good. Do you want to know what the latest update on this index is? Which, by the way, nowhere has discontinued, right? You don't see anywhere discontinued. You want to know when it ended? February 2020. And what was it indicating? 1.72. So much for the 6 month forward looking, right? This is what I mean, guys. When you look at these kind of 6 point model bullshit, you're not going you're not going to make money using that stuff. It's garbage, right? Just like Logan's 6 point model. It's garbage. It's garbage, garbage, garbage. There's no use in these things. And I promise you, they're going to revamp it. They're going to find something that's going to make all previous recessions look like it works. They're going to redraw the chart, just like they did with the leading indicator. Okay? And then they're going to pass it off to you as, well, you should really follow this because look, each recession prior to this, it predicted 6 months prior that it was going to happen. Right? And again, not only do I make fun of Logan because he was like, well, you know, the leading indicator. Well, the leading indicator is still showing you that there is a recession. And yet he's running around telling you, oh, everything is fine. We recovered. What? Everything is good. Yeah, but the leading indicator is still negative. So by your own fucking model with this leading indicator, you should not be saying the things you're saying. The only way you can justify you saying what you're saying is by looking at the stock market. Well, if you're looking at the stock market, which I asked him directly, personally, are you looking at the stock market? He says, no, I don't want to talk about the stock market. I am the economics guy. Okay, so by your own fucking economic data, your own 6 point model, you are still in a recession. So why are you saying, oh, look, America, you know, look, fire, American flag, muscle. Why are you doing that? Your own indicators are showing negative. You didn't know that in 2007, the leading indicator, and not this one, the other one, was not showing a recession. 2007, it wasn't showing a recession. In 2011, they again revamped it. Okay, they added credit, and then they made it work. And once they added the credit, and they went back, they redrew all the charts. Oh, look, it works wonderful. It looks fantastic. He didn't know that, so he kept posting that and passing it off as a leading indicator that has been right for since 1776. Yeah, but dude, you don't even know that it was revamped and redrawn because it never showed the recession 2007. How about this time? The leading indicator, um, consumer board or whatever it's called, did that show a recession coming? No, no, it never showed it. By the time it showed it, the market had crashed 30%, and then came all the shitty economic data, right? So it's not just Logan. All these leading indicators, they sound great and they mislead you. So don't fall victim to these things. Okay? Don't fall victim to these things. Lastly, here's what I would say for you to do to learn how to use this data on your own. Okay? And that's hopefully what you guys are learning. A lot of people are lazy. They don't want to do it. They just want to hear it and then go about their day. But if you're smart, you'll learn how to do your own analysis. It's not that difficult. Now, this is the tips, right? Divided by the 20-year Treasury bond. And the reason you do that is you want to see what is leading. Tip is Treasury investment protection. If you are fearing that you're going to have inflation, and inflation is relative from wherever we are right now to the future, if you are afraid that there's going to be more inflation, you want to buy tips. Or the TLT, which is a 20-year. If you're not afraid of inflation, then you go out and buy a bond because you're fearful. You don't want to be buying a risk asset. You want to buy a bond, which is safer, quote unquote. and you buy a bond. So the bond price will rise. So when you contrast those two, the inflation protection versus the bond, which is fear in the market, okay, it's going to give you a result. And what is the result showing you? Well, it's been showing you that there's deflationary pressures, that TIPS have been underperforming bonds. Okay, recently, since this whole thing started to unwind, and let me kind of show it to you this way. Okay, so you have a good idea. So in 2009, there was a fear that there would be inflation. So what happened? TIPS outperformed bonds. Okay, people had a bigger appetite to go out and buy Treasury inflation protection rather than bonds. Since then, it's been the opposite. People are not afraid of um, inflation. Okay, they're they're expecting inflation to fall. So we end up in this situation where we hit this all-time low, and then we're getting into the what? A period where there is some hope of some inflation due to M2 being as high as it is. And let me change this up a little bit. 1 second. There we go. So then you get some hope that there'll be some inflation. And you end up with this counter trend move, rising wedge towards the bottom, which signals what? That this structure should break to the downside. All right. What does that mean? It means that there'll be more deflation, not inflation. This structure is telling you that at some point in the future, people are going to prefer to buy TIPS, bonds over Treasury inflation protection. TIPS. The TIPS will continue to underperform. That's what that structure is telling you. So, when you understand just this simple little chart, do you expect for this reflation trade to work? Judging by money flows, right now, no. Because you're still not broken out of this structure. You're still below the previous lows, right in here. This is just a relief rally. That's all that this is. Okay. Even if it were to break, you're still in a downtrend. You're still in a downtrend. So should you run out and buy jets, airlines? Because there's going to be a better economy, there's going to be higher inflation than the 1 point whatever we have right now. No, there's no need for you to FOMO. No need for you. How about if you were to look at, let's say, jets relative to NDX? What is going to perform better, right? And it's shown you since May of 2015 till today that airlines have underperformed the Nasdaq. Yes, we have bottomed out in a sideways kind of formation down here. Okay, but what you're not seeing, you're not seeing that jets are outperforming NDX. That the money now is going into riskier assets, and they're selling the more mature, the bigger stocks. You're not seeing that. I think it's probably better that I do XAL because it has more of a time frame. Okay, this is just for illustrations. I would still use jets, but here's what it looked like. This is not the one. Where is it? XAL. Jets. here we go. So look at this one now. Okay, this goes all the way back to the 90s, but we're not interested in that. We're interested in 2008. When you look at 2008, you're going to see that airlines were underperforming, okay, NDX. And then what happened? Well, it bottomed, and airlines for the next 8 months outperformed NDX. Why? Because it had bottomed. And this is what I was talking about last week, that if the vaccine is truly going to um, be effective, and the market believes that, you're going to see that airlines are going to start to outperform significantly um, the market. And maybe that's why the Nasdaq is not rising. And that was the initial thought that I had. And granted that this is a weekly chart, so we still need more time. Perhaps this may happen, but notice how sharp the reversal was. Okay? Very, very, very sharp. This move here was huge, and it was sudden. Okay? Of course, eventually you're going to get that pullback. That's normal. And then what happened? Once it got the pullback, and this is why I'm saying don't FOMO, don't fear of missing out, don't go out buying just because something is going up. Wait, wait. There'll be a time. And I know people hate when I say wait because they're like, yeah, but it's going up now. I was right. See? Yeah, you're an idiot. You have to wait. Wait. You'll get the pullback. Now go out and buy it. Now go out and buy it. It's much less risky. Okay. So what's it look like now? Right? And then you saw that it outperformed, right? Airlines NDX, they were so beaten up, they outperformed, and eventually in 2018, that's when, remember what happened? QE was flattening out, uh, the market dropped 20%, whatever, right? There was a shift, and I think I said that at the time. I said, look, there's a shift in the market. Something doesn't look right. The way my portfolio at the time was set up didn't make sense. Something was wrong. So we end up now that it started to indicate weakness in the economy. Again, airlines are economically sensitive. You get that COVID drop, and where are we now? We've bottomed out. We don't have that move yet. Let's put it that way. Yet. We don't have this. Okay? We just had a little bump. So you know that the Treasury inflation protection is not, nobody's buying it. Okay? Significantly yet. You know the airlines are not outperforming the Nasdaq. So what is that telling you? Run out and buy airlines right now? We looked at the individual airlines. No follow through this week. Doesn't mean it can't happen next week, but for right now, no follow through. Double tops. Okay. You want to interrogate the data. You want to look at it from a different perspective. You want to see where the money's flowing. How hard is it flowing? Does it look like it's supposed to? Back here. Where it was a limp tick and then boom. No. We're still in a pause, in a holding pattern. Same thing with the tips. The tips, you got this nice little rising wedge. You're looking for one more down before up. Okay. If that next move does come, then it's a good time to start really examining what the economy looks like. Then, how far are we from real recovery? How fast is the recovery, the real recovery, not the V-shaped bullshit recovery is going? How much stimulus or no stimulus did we get? How much QE is going on? Right? All those other factors come into play. But I will say it again. I don't know what's going to be important 3 months from now, 6 months from now, a year from now. You got to be here so I can tell you what is important because I don't know where the economy is going to be. I don't have a crystal ball. But when it does come, I will definitely point it out to you. All right. So that's it for now. Merci beaucoup. Let's just take a quick little peek. All right. Nasdaq down. We'll expect this to continue to go down. All right. For tomorrow. Same thing with the S&P. Okay, broke down. We didn't look at the volume weighted for today. Maybe we should real quick. Okay. And you want to pick points that are significant. So we want to look from here, right? From right down here, where the point of control is. Oh, I forgot I have the other tool. Let's use the new tool. All right. So I want to know from here to where it is here, where the point of control is. And look at that. From the bottom back on October 30th, point of control is exactly where price is going right now. All right. So the next point I want to know is from the top. Oops. Is from the top, right, hither to the bottom. Point of control is right about there. Okay. How about to where it is now? Point of control is just above you. So we've given up the top point of control from the top to where we are now. We've given that up, and we're going to that longer term point of control. Okay. The next one you want to look at, where's that? There it is. Where's the, from the previous all-time high till today, point of control is somewhere 3408. Okay. So that's 4.3% lower. Okay. And that 4.3% lower also happens to coincide with the 63-day moving average. And it also completes the 1, 2, 3 wave down. And you start seeing how things start to make sense, right? Anyway, that's it, guys. Thank you very much. Thank you, Alessandro. Take care. I'll talk to you guys probably tomorrow. The bias is to the downside. That's it. Thank you. Good night.